Good morning, student. Today I am going to teach you new chapter. This is not for profit organization. Not for profit organizations. This is my lecture number 49. Under this chapter, learning objective will be meaning of not for profit organization, meaning and features of receipt and payment account, meaning and features of income and expenditure account, difference between receipt and payment account and income and expenditure account, preparation of income and expenditure account and balance sheet from receipt and payment account. So let us start meaning of not for profit organization. We all know there are two types of organization. First, profit organization, and second, not for profit organization. There are certain organizations which are formed not to earn profit but to render services to its members and to the public. Such organization includes clubs, hospitals, schools, religious institution, charitable institution, libraries, literacy societies, etc. These non-profit seeking entities exist with a primary motive of providing service, such as a club provides a sport and recreational facilities, a hospital rendered medical services, a literacy society promotes art and culture, and association may also be formed to protect the right of its member. You can say schools is profit organization because schools take fee from a student, but it is not a profit organization. It is not for profit organization. Our DAV school, for example, we can say our DAV school is running under the not for profit organization. Its main motive is not to earn profit but to render services. As the main aim of the organization is not to earn profit, They do not prepare trading and profit and loss account. But still, they have to maintain proper accounts. This is also a legal requirement, and they would also like to know whether their current income are sufficient to meet their current expenses. For this purpose, they prepare an income and expenditure account, which is similar to a profit and loss account of a profit seeking entity. A balance sheet is also prepared in order to show the financial position of the organization. Now, the features or characteristics of NPO. NPO means not for profit organizations. First feature is main aim to service. Yes, student, such organizations are set up to provide service to a specific group or the public at large, such as education, healthcare, sport, entertainment, etc. The main aim of this organization is to provide service either free of cost or at nominal rate and not to earn profit. Second, form. These organizations are set up as a charitable trust or societies, and subscribers to these organizations are called members. Next, third point is separate entity. You all know the concept of separate entity. Not-for-profit organizations are treated as a separate entity distinct from its member. In other words, it is not affected by admission of new member and the death or insolvency of an existing member. Fourth point is accounts. These organizations also have to maintain proper accounts to meet the legal requirement and to exercise proper control over utilization of their funds. Next point is managed by elected members. These organizations are usually managed by a managing or executive committee elected by its member. Major source of income. Next point is major source of income. The major source of their incomes usually are subscription from member, subscription. In Hindi we can say that subscription means chanda, donation, financial assistance from government, in the form of grant in aid, income from investment, etc. are the major source of income. Next point is surplus not distributed among its members. Current year surplus in the form of excess of income over expenditure is not distributed amongst its members. It is added to capital fund. Now the difference between not-for-profit organization and profit organization. Primary motive of not-for-profit organization is to provide service, but primary motive of profit organization is to earn profit. Not-for-profit organizations do not maintain any capital account, instead they maintain capital fund. And profit organization maintain capital account. In not-for-profit organization, there are 3 accounts prepared. First is receipt and payment account. Income and expense. Second is income and expenditure account. And third is balance sheet. But in profit organization, it maintain trading account, profit and loss account, we all know about it, and balance sheet. Now the net result shown by income and expenditure account is either surplus and deficit. But the net result shown by profit organization is called net profit or net loss. So these are the difference between profit organization and not profit organization. Surplus of not-for-profit organization is not distributed among its members. It is adjusted in capital fund, but profit organization distributed among the owners of the business. So these are the basic difference between not-for-profit organization and profit organization. Now next point is not-for-profit organization also prepare their financial statement more or less on the lines of the profit-seeking organization. The financial statement of not-for-profit organization include the following 3 statements. First is receipt and payment account. Second is income and expenditure account. And third is balance sheet. So now we have to study about receipt and payment account. This account is a summary of the transactions appearing in the cash book. According to William Pickles, receipt and payment account is nothing more than a summary of cash book. Over a certain period, analyzed and classified under suitable headings, it is the form of account most commonly adopted by the treasurer of societies, club, association, etc. when preparing the result of the year's working. As such, a receipt and payment account is prepared at the end of the year from the cash book. All receipt and payment which are entered in the cash book are also entered in the receipt and payment account. Any transaction which is not recorded in the cash book will not be entered in the receipt and payment account. So some features of receipt and payment account is following. First, nature of account. Nature of account. It is a real account. Hence, the rule of real account, that is, debit what comes in and credit what goes out, is followed while preparing it. Thus, receipts are recorded on the debit side and payment are recorded on the credit side. Second point is it's start with the opening balance of cash in hand and cash at bank. Cash in hand always shows a debit balance and will therefore be written in debit side. Cash at bank may show a debit or favorable balance in the cash. It will be written on its debit side. But if bank balance is an overdraft or unfavorable balance, it will be placed on the credit side. Third point is nature of the items recorded their side. It is a summary of cash book. All cash receipts are shown on the debit side of this account, irrespective of the fact whether they are of capital nature or revenue nature, or whether they related to previous year, current year, or next year. For example, receipt of subscription is a revenue receipt and receipt from sale of furniture is a capital receipt. So both are recorded in the debit side. Now same in credit, nature of the item recorded credit side. Likewise, all cash payment are shown on its credit side. irrespective of the fact whether they are capital nature or revenue nature, whether they relate to current or previous or next year. All the item will shown in credit side, which is the related to payment. Now, fifth point is closing balance. In this account shown closing balance of cash book. This account is balanced at the end of year by entering the closing balance of cash in hand at cash at bank. Now, next point is non-cash items are not recorded in this account. Only those items are recorded which is related to cash paid or cash received. Last point is purpose of this account. This account does not tell us whether the current income exceeds the current expenditure or vice versa. It shows the closing balance of cash in hand and at bank in order to ascertain the net income or loss of particular period. Now, some difference between receipt and payment account. Difference between receipt and payment account and cash account. It is prepared on the basis of cash book, but cash book is prepared on the basis of cash receipt and cash payment. Receipt and payment account is prepared at the end of accounting year. In other words, it is a summary of cash book. But cash book is prepared on daily basis. Cash book is prepared on the daily basis. Now, receipt and payment account is a summary of cash book. It is not deemed to be a part of the double entry system, but cash book forms part of double entry system. Now, receipt and payment account has debit and credit side, but DR side called receipt and CR side called payment. It has debit and credit side. Receipt and payment account has no ledger folio columns, but cash book have ledger folio columns. Receipt and payment account is prepared by not-for-profit organization, but cash book is prepared by profit organization or not-for-profit organization, both. Now, meaning of income and expenditure account. It is similar to the profit and loss account of a profit-seeking entity and is prepared to ascertain whether the current income are in excess of current expenditure or vice versa. In other words, it reveals the surplus or deficit arising out of the organization activity during a particular period. It is prepared in the same manner in which a trading and profit and loss account is prepared in case of trading organization. Hence, all expenses and losses of a revenue nature are recorded in debit side, and all the income and gains revenue nature is recorded credit side. The end product of this account is surplus and deficit. Now the features of income and expenditure account. Nature of account. It is a nominal account. Nominal account. Hence, the rule of nominal account, that is, debit all the expenses and losses, credit all the income and gains, is followed while preparing it. Second is nature of item recorded in it. Only items of revenue nature are recorded in it. All items of capital nature are ignored when prepare income and expenditure account. For example, amount received from sale of furniture will not be recorded in it, but the profit earned or loss suffered on the sale of furniture will be recorded in it. Now, next point is adjustment. This account is prepared in the same manner in which a profit and loss account is prepared. As such, all adjustment relating to the current year, such as depreciation, outstanding expenses, prepaid expenses, accrued income, unearned income, etc., are taken into consideration while preparing income and expenditure account. Now, fourth point is it records income and expenditure of current period. It excludes all the items of income and expenditure which do not pertain to the current period. In other words, all items relating to previous year and future years are excluded while preparing income and expenditure account. Purpose. Closing balance of this statement reveals surplus and deficit. If the credit side exceeds the debit side, it reveals surplus, and if, on the other hand, if the debit side exceeds the credit side, it reveals deficit. The surplus is added to the capital fund and deficit is deducted from it. Difference between receipt and payment account, income and expenditure account. First difference is it is a summary of cash book, but income and expenditure account is prepared like a profit and loss account. Debit side of receipt and payment account record receipt and credit side record payment. But in income and expenditure account, income are recorded in credit side and expenditure are recorded debit side. Third difference is it is real account, but income and expenditure account is nominal account. Receipt and payment account start with cash and bank balance, but it has no opening balance. Closing balance of receipt and payment account may be cash and bank balance, but closing balance of income and expenditure account show deficit or surplus. In receipt and payment account, all receipt and payment made during the year, whether they related to current year, previous year and next year, but it income and expenditure account only record current year balance. Next point is receipt and payment account need not necessarily be accompanied by a balance sheet because all revenue as well as capital item are included in it, but income and expenditure account are included only those items which is related to revenue nature. Now the difference between income and expenditure account and profit and loss account. The main objective of income and expenditure account is to ascertain excess of income over expenditure or excess of expenditure over income. But the main objective of profit and loss account is to ascertain net profit and net loss. Income and expenditure account is prepared by not for profit organization, but profit and loss account is prepared by profit organization. Income and expenditure account is prepared mainly on the basis of receipt and payment account. But profit and loss account is prepared on the trial balance. Balance of income and expenditure account show surplus or deficit, but balance of profit and loss account show net profit or net loss. So these are the main theory of not for profit organization chapter. I will meet you with some new topic in next video. Thank you very much.